Welcome to the AHQ podcast, where we interview seasoned operators who are growing large-scale companies from 2 million to 75 million in EBITDA. We also are interviewing capital providers that are actively deploying capital into cash-flowing assets. Additionally, we also interview M&A service providers, just like yourself, that help people with tax, wealth, CFO and accounting, you name it. We've had them on our podcast, and we're excited to be able to get into this one. Before we begin, we've got one of our sponsors who I wanted to give a big shout out today to. That is the Mount West Watch Co. They're located right here in Salt Lake. The founder of this company, he's created these amazing timepieces, which are actually the main and official timepiece of the Acquisition Conference coming up in October on the 19th through the 21st right here in Salt Lake City. So take a look at the Mount West Watch Co. if you want to grab one of these, and you'll love it. So Jayden Thomas is an investment advisor with Taylor Proactive Team. Taylor Proactive Team is actually our official sponsor of the title sponsor of the Acquisition Conference coming up. So we're thrilled to have them, bringing a background in accounting, private equity, investment analysis, and wealth management. With a master's in accounting, Series 65 registration, and experience in private equity accounting and portfolio analysis, Jayden brings a strong financial foundation to helping entrepreneurs and investors make smarter capital decisions. Welcome to the HQ podcast.
Sweet, man. Thanks for having me. Yeah,
Well, I'm excited to be able to get into this a little bit deeper because every business has taxes they must pay. It's one of those things. We all know it. But we're going to talk a little bit more about, yes, the taxes that are having to be paid, but also the strategies to mitigate the amount of taxes that must be paid. Additionally, the ways that you can allocate capital to have a tax strategy that will, in essence, give you a cash flow back. So I'm excited to be able to get into that today.
Yeah, absolutely. Yeah, as you mentioned, everyone pays taxes. You live, you die, you pay taxes.
Well, so share with us a little bit more about what you've seen with businesses that are actually having to pay taxes, and then how you would structure. Obviously, we can't go down every specific rabbit hole like you said earlier, but share with us a little bit more about how to prepare properly within your company for your taxes.
Well, really, the one thing that we see, and this is actually what we kind of differ from most CPAs or most tax advisors, most financial advisors, etc., is people are not proactive. So that is the first step to actually solving your tax issue or setting your business up to do a big exit or whatever it may be that has those big tax liabilities that come with it. Is being proactive. We can help immensely when you reach out to us a year in advance, 6 months in advance.
Okay.
We can't help out as much as we would like to when you reach out to us after. Hey, by the way, I just sold my business for $30 million. Well, the IRS is going to want their chunk
Immediately.
Immediately, or penalties and interest. Plus, we can't really do anything, like I said, on the back end unless we do some carryback.
Let's define what proactive means.
Yeah.
And I know there has to be a tactful approach to the proactivity of one's, business within the realm of taxes. So share with us a little bit more about your definition.
Yeah. So proactive really means that, especially with how we have our clients set up, is we want them to be proactively reaching out to us with almost every financial decision they're making. So whether it's selling their business, whether they have somebody that's coming in asking about their business, whether it's setting up tax strategies for the year because they had the best year they ever had, whether it's structure of their entities, etc. We want them to fully reach out and be actively contacting us, feeling like there's that door that goes both ways.
Yeah, that's smart.
And that's the proactive part. Okay, let's make sure that you feel like we are not just some guy that's billing you per hour.
Yeah.
Because we're not.
Have you asked somebody why they do not reach out proactively?
Yeah, most of the time it's because, one, they think that our time is more valuable than that.
Okay.
Or they think that their situation doesn't really qualify, or they don't really set up for, I guess, their exit or whatever it may be, doesn't really qualify for our services at that moment. So
So it's like it's only when they need it, that's when people are reaching out for the most part
Yeah.
in regards to their taxes.
Yeah. So after the event, like I was mentioning, after the event, it's not proactive because they don't think that it qualifies for a phone call, for a meeting,
Okay.
which that's what we want to open that door for.
Yeah,
And
that's
that's
good.
kind of what we prioritize.
Well, that's really important for us to set that foundation for the business owners out there that you're actively growing, and you have to have a whole cabinet of support around you.
Absolutely.
At the end of the day, right? It's like, who are the team members that are going to help me along this journey? Right? It's always like sales, marketing, supply chain logistics. You have finance, you have legal, all these tax and legal. It's like literally hand in hand.
Yeah.
But you've got to stack your team, and it seems like, again, you're telling us and suggesting that you're proactively reaching out to all those team members.
Yeah.
So,
yeah, absolutely.
that's good.
So as you know, tax, as you just said, is one of like the 10 different pieces to a whole financial puzzle of an individual. So the individual has their business, they have their other financial life, they have their personal finances. We want to make sure that all those work in twine with their financial advisor, with their estate planner. We want to be really the cohesiveness and kind of the glue between that, because most individuals trust their accountant and CPA more than, their financial advisor.
Talk to me more about what does advanced tax strategy mean as opposed to tax strategy, right? So at Taylor Proactive, you guys have that as like that's your battle cry, right? Like that's everything that your company believes in. Share with us a little bit more about the differentiating factor between how you guys do that.
So advance is every single person has a different scenario. We consistently see people get online and they're like, oh, if you make over 200,000, you qualify for this. Not true. Every single person has their specific scenario, specific financial life, specific business, specific different avenue that they go down. And they all have those different tax liabilities, tax situations, and certain strategies will apply to others and they won't. So such as like charitable contributions, as we mentioned, we do a bunch of credits, we do certain things that we can go down, but we have to do a full advanced tax plan to fully understand your situation and plug those pieces as they come and go, or set up entities in a way that they should be set up. It just depends on your specific scenario. So,
disclaimer, this is not tax advice or investment advice, but again, we do have a tax professional sitting right across from us, so we're going to ask you specific questions that may be pertinent to your situation. So as far as the frameworks, so let's look at frameworks and strategies around now this building company. Can we do that together? So basically, let's create a scenario. We know the scenario is not going to be the same for everybody.
Yeah, please.
But so we've got a company that they net probably, I don't know, let's do gross at like 3 million. Okay. And then they're looking at a tax burden in essence of X amount. I'm sure you probably know the calculation exactly, but how do we strategize this tax mitigation plan in essence through the entire year, and how long should we be proactive as far as creating that scenario for this company?
Yeah, no, that's a great question. So we like to meet at least once a quarter, like
strategic meetings
where we go through and we want to build that advanced tax plan to make sure that we're still on the right track of you going in the right place that you want to go.
Okay.
Especially with taxes, as you mentioned. And so we want to meet first quarter. Okay, you had a great quarter. Second quarter wasn't too good. The third quarter, it was fantastic. But this is really where we start tax planning, is that third to fourth quarter.
Okay.
And that's where we want to start setting up those tax strategies that we can plug in to your specific scenario of building your $3 million.
So 3 million. So let's go into this, right?
Yeah,
so
please.
How are we going to be allocating specific capital to a cash flowing tax strategy in essence? Yeah. Now you can use maybe one or two or maybe even three different examples, because I know there's solar tax credit was utilized in the past. You have gas stations, you have, you've got historical tax credits, you've got all these various things. But what are some of the things that you have seen that have worked very well in your experience?
Yeah, there's caveats. So just an FYI, there's caveats to all of them, and they don't apply as a cookie cutter to everybody. And so, like the solar, that's a fantastic one. It does the credits, it does the deductions on the back end, depreciation on the back end. We've seen mobile home donations. So we donate mobile homes that need repairing. They do fantastic. Our clients love that one because they actually help people as well.
Oh, wow.
So
okay, hold up real quick. Is that a mobile home that is constructed and then donated to someone else who needs the housing? Or
no, so
sorry if I'm going too deep into
please,
this.
I love it. Sure, this is great. This is great because most people hear tax strategy and they're like, what, do you have a magic wand? No, we don't have a magic wand. Well, kind of. It's called Excel, but
right.
Yeah, that's no, we don't. We just work with these amazing companies that the IRS actually sets up these different tax codes and different tax incentives because they want you to spend in this area. They want you to donate into these mobile homes and help individuals that way. They want you to make charitable contributions. Okay. They want you to put as many solar panels as well. Maybe not with the big, beautiful bill anymore, but they want you to put as many solar panels as possible. They want you to invest in oil. I could go down a list of things. Exactly. They want you to invest into. And that's where we have this massive list of things that we can dip our hand into.
Okay.
It's kind of like wearing a tool belt.
Yeah.
When you have a tool. As I mentioned,
and you guys are privy to all the newest, latest, greatest, basically tax incentives that, in essence, individuals like myself or those out there, you've got to come to someone like yourself because you literally have a Rolodex of all these opportunities for us to be able to potentially utilize.
Yeah, absolutely. Yeah. Whether we use companies to help set them up, or we just set them up ourselves, or whether we help. Not just with plugging in a strategy. As you know, you work with a ton of business owners that do massive exits. At least that's the goal.
Yeah.
Man, it takes hours and hours and hours and hours, long nights, as you guys know, building a business for that one moment that you sign something.
True.
Get the money. Okay. How do you keep the money? Exactly. How do you keep the money? That goes into not just plugging these strategies in, which we have access to, and we do utilize consistently, but let's set up entities here. Let's set up your trust in a way that benefits you, not just your family, but generationally tax.
That's good.
So,
okay,
yeah, that's kind of
I got to dig deeper into this because I know people out there are like literally curious on this exact way. This $3 million company has excess in money, and then it's also you have. So how does a strategy work though? You know, I'm trying to play dumb here, but I just really want to know how capital allocation that would have had to go to taxes, is it being placed into this charitable tax or system, or like how does it make additional capital? Like, share with me, basically step me through the entire process.
Great question, because like I said, most people are like, do you have a magic wand? It's like, no, we don't. We do allocate it towards these individual tax codes. So let's say we are doing the mobile home donation.
Yep.
Yeah, absolutely. You would instead of allocate the funds towards just paying normal tax liability to
like
the
your IRS bill, in essence.
Yeah, instead of going to IRS.pay.
50,000.
Yep. Yeah, exactly. You would actually allocate a percentage of that towards mobile home donations that actually help individuals that need help, or towards the solar that you can help finance solar for individuals that need solar or that want it on their homes. So that ends up being a net positive.
And then it's a net positive. But like, tell me a little bit deeper, what is the net positive and how do you get to a net positive?
Yeah. So like I said, it's you allocating, instead of, let's say your tax liability is 50,000.
Yep.
Without going too deep into it, obviously everybody's scenario is different. You would allocate 30,000-ish to solar, to these mobile home donations. And it could cover up to, if not more, your tax liability. Obviously, that we don't know the exact scenarios or the exact details. So that is not advice, but that is kind of how the strategies work, is they allocate at an arbitrage rate consistently. Yeah. So we want to make sure that you don't pay a 1-for-1. We want this to be a beneficial relationship to where they actually come in, they get their advanced tax plans, they do their strategies, and then they come out being like, wow, we paid them this, we paid the strategy this, we would have paid the IRS this, they
Mhm.
saved us this. In a more
In
beneficial
a
way.
nutshell.
Yeah.
Yeah. This is so intricate. I mean, I know this
Yeah,
is what you guys
please.
do for a living though. I mean, it's
Mhm.
like you're in the
Yeah.
books, you know the strategies, you have all these tools, like you said, on your toolbox to be able to work with your clients, to be able to save them money on their taxes, plus make money potentially off of investments that could
Yeah.
basically offset your overall tax burden.
Absolutely. And that's we never want to go into mind trying to avoid the taxes, because that's not
Yes.
what we're ever trying to do. We're just trying to use these venues and these routes that we can go,
Incentives.
incentives,
Yeah.
exactly, that the IRS has set up in the government, that they want you to spend
Yeah.
money in these investments.
And they're always coming up with
So-
new ones.
absolutely. Yeah, the
Correct.
big beautiful bill
Yeah.
eliminated some and actually created quite a few. So
Okay. Does that
Yeah.
keep you up at night? It's like, what's the next new one?
you
So
could
good.
you could spend your entire life trying to understand the tax code and
Yeah.
the new tax codes that come up.
Okay.
We do our best consistently, and that's why everyone's scenario matters.
So
specific
we
one.
went the business route just for a little while, but personally, I'd like to get an
Mhm.
understanding of you and as well what brings you life and joy around helping these companies and individuals understand their finances.
Oh, sweet. No, that's a great question. I actually never wanted to do public accounting
Mm-hmm.
or taxes or any of that. That was never in my cards, because I always saw an accountant or a tax guy as somebody that you gave your forms at the very end of the year,
Mhm.
and they just gave you your tax bill at the very end.
True.
And they were like, oh, by the way, you didn't pay enough taxes. You owe this. And it's like, well, is there something I could do? I used to ask, I actually went to a CPA before, and I used to ask, like, what can I do to proactively help this? Like, can I invest somewhere? What should I be investing in? What should I be doing? And it's like, well, just pay your taxes. Like, well, I never wanted to be that guy. And so I went down that route of financial planning.
Mm-hmm.
And that's where you can actually help people on that side. We wanted to build growth, which we have through the Alpha Wealth Bruins crew. And then we actually started that, the tax side, because we saw that massive avenue of individuals that actually need advanced tax planning,
Mm-hmm.
and then found Taylor Proactive, where they have the same exact values that I had. Let's actively proactively get after somebody's taxes.
Mm-hmm.
Let's put in these strategies. Let's make sure they save on this, rather than feeling like taxes is such a burden always.
Well, and it's interesting too. It's like, some maybe they're behind on their taxes and then they have to get that cleaned up. But what would you suggest somebody who's in essence they have to go through a cleanup phase?
Yeah.
But when should they start to talk to individuals that will help them with their strategic plan and after their back taxes have been are taken care of? Basically?
Yeah. If you need help with your taxes,
Mm-hmm.
now.
Oh yeah, no.
Yeah.
Yeah,
It doesn't matter if you want a strategic plan. It doesn't matter if you're back on your taxes. Reach out now, because we can help do that. So we can help come back on the taxes. We can help catch you up. The best time to be proactive is now,
Mm-hmm.
to make sure that you are set up in the right spot, because there's so many scenarios and loopholes and whatnot that we can kind of go through and
Mhm.
help you get in a better spot. But if you're not proactive about it, it just keeps piling up. It's kind of like a procrastination.
Yeah, yeah.
So most people are they procrastinate their taxes more than anything on the planet. They don't get us their stuff in time. We get stuff April 15th. It's like, thanks for doing that. But nobody ever wants to talk about taxes,
Isn't that the
deal
due
with
date?
taxes. Exactly. Yeah, they're like, here you go. We're good. So, but that's what we want to avoid doing that, because the more proactive you are, the better you'll feel, the better you can sleep at night.
Mm-hmm.
That's kind of really what we're trying to do, is make sure that people can sleep at night and they don't really worry about taxes, especially
Yeah.
these individuals that own businesses.
Yeah, it's so interesting. It's like IRS is a business partner. If you need to look at him, he, she, whatever it is, I don't know. IRS. My goodness, that's
A
funny.
beast. Yeah, I don't know.
Yeah. Well, no, there's a lot that we can go here. I mean, there are scenarios. There's tons of business owners. They have these liabilities. They have, these strategies to implement. We've touched on this, some of the strategies, but my question too to you is, we want to start our own research. We want to start getting down this rabbit hole. Again, to do our due diligence as a business owner to make sure that, hey, look, who we go with is the right team, but also some of the knowledge that we need to bring to the table to these tax professionals as well. So what would you suggest a business owner to have ready prior to going into conversations, but also where do they access the information that's needed?
That's a great question because most people don't know that. Most individuals that we work with, as you guys know, they are so good at their one avenue.
Mm-hmm.
They don't really know. They're like, well, what's going on with my finances? I don't know. I have QuickBooks do it. Like I have this guy do it. I have this guy file my taxes. I have no idea. But I'm super good at software. I'm super good at building a business. I'm super good at this. And so the one thing that we really recommend is obviously we want to see your situation that you've been dealing with. So like past returns, past QuickBooks, whatever it may be, books, and then really your financial health overall. So we try to take in toll the entire financial health, not just their business. And so I would have kind of a book of everything. Your business, your personal life, your trust, your kids' expenses, everything all in one.
Mm-hmm.
And let us help you entirely, not just with, let's say, your business books, financials.
On April 15th.
Sure. Yeah. If you want to do that, please do. We'll probably
we want to be proactive. What I'm saying is to April 15th.
No, please. Yeah. Please don't do that. That's what we're trying to push away from as much as possible.
How are you helping your clientele understand that it's important to be proactive? What are some things, what are some things that you would suggest again? Because we say, well, don't procrastinate. Well, how should we share this to you as business owners out there to be more proactive? What would you suggest people do around that?
Suggest they do.
Mm-hmm. Yeah.
Well, pick up the phone and just let us do the work.
Pick up the phone and call Taylor Proactive.
Yeah, pick up the phone and let us do the main chunk of it. Just mind dump everything you have onto us.
Okay.
Let
and
us
like you said,
it
it's not only about an hourly rate. It's about you guys ultimately wanting to help the business owner because again, at the end of the year, you guys will obviously have ways to be able to make the business's money, but also to help others through that process.
Yeah, absolutely.
So it's not just about a fee generating machine,
Yeah, and that's why we're actually getting away from like the hourly rate because we want people to be proactive towards reaching out whenever they want to.
That's smart.
Rather than them just, I don't know, texting us or calling us and being like, hey, what's your hourly rate? I have 45 minutes that I can talk to you or whatever.
Maybe. Yeah, I think that's super important.
Yeah.
Let's see, 3 to 5 years. So there's a typical timeline that people are suggesting that you kind of like clean up your books and then because this is upon the exit for somebody's company. Have you worked with anyone that's gone through an exit and then?
Oh, absolutely.
Yeah, exactly.
Yeah, that's we specialize, especially through Acquisition HQ, in helping individuals that exit their company.
Well, tell us more about the preparation of what that looks like to be able to clean up books and then as well have that entity ready. But then also let's walk through the scenario that we have now had that exit. We have the liquidity. And you said earlier, how do we maintain and hold on to that capital? And then again, you've worked in the private equity markets as well as understanding alt investments, like what you have worked with in the past, where people were making money on option trading as well as other forms of arbitrage. So share with us more about how, one should prepare the company and then upon that exit, where does this liquidation go?
Yeah, no, that's a great question because most founders, like I said, don't know that portion.
No,
they know software, they know shoes, they know whatever we've dealt.
I know the plumbing company.
Yeah, exactly. Yeah, they know plumbing, but they don't know. Okay, how do I build this up to where this is actually scalable, or this is a business that I can actually exit and is worth purchasing? That is a huge thing that we see coming across all these founders. One of the things that we like to do is, like I said, we take into account, we kind of do like an intro meeting where we come into a facts, they just kind of dump everything onto us. And then we see their full financial situation. We figure out kind of what needs help, what doesn't. And then we start helping them in that aspect, whether it's clean up their books. We have a bookkeeping team that does a fantastic job that way,
Mm-hmm.
whether it's they have employees that have 1099 that they shouldn't be. They should
Smart.
be W-2 because they don't qualify. Those are things that people that buy businesses look at. Like, okay, you have a lot of debt. What's this debt from? Well, let's make sure we're taking those into account. And those are the things that we want to make sure that we're touching base on before you sell the business.
That's
Once those are taken care of and those are kind of planned and those are all taken, I mean, you can sleep at night finally and your business sells. That is where you have this liquidity that you've never had before. That is where we actually can start putting in these tax strategies, building the entities that we need to, the structure of the entities.
Mm-hmm.
Actually, the entities take into account a little bit before the
Mm-hmm.
exit. So please be proactive
Yeah.
again. But then after that, that's where we start being efficient about the investments,
Yep.
the tax planning every single year. And that's what we do. So on the front end, hopefully we do amazing investments. We kind of create those win-win scenarios, hopefully. And then once we do that, that's where we can start tax planning every single quarter and every single year consistently to make sure you're in the right tax position.
As a fiduciary, where have you seen, again, this is upon the liquidation event. Now we
Yeah.
have a chunk of capital. Where do we allocate this? How do we start to be good stewards of the capital that we now have created in the business now that has realized that value? Where do we put, where this isn't, again, advice, this is through experience, whatnot, but where have you seen areas that can be a strategic placement of capital?
Yeah. No, that's a great question because I wish I had a crystal ball.
Yeah.
of
I mean,
like
I guess you'd say real estate, stock market,
yeah. So I
you know.
never been a fan of just diversifying the snot out of your portfolio and hopefully it rises all with the stock market, the market. Hopefully it never does that. We try to create win-win scenarios of that options trading or through those portfolios of being in like the short-term government treasuries where we can place those small options on top of them, the volatility options. Those are great ways. And then there's a huge thing as well that we like to make sure is kind of a priority, and that's liquidity. So as you know, most of these founders come across this, they do an exit, they have this big liquidity event, and now they have 15 individuals reaching out to them about life insurance annuities or whatever it may be. And it's like locking up their funds or into real estate that it locks their funds up for a DST, whatever. That is not something that we ever want to happen because that is not proactive or planning because we can't actively plan for an event that you or a DST that you put money into that has
do not lock your money into areas you cannot have access to it.
100%.
That's what you're saying.
Absolutely. Yeah. That is the number one recommendation because then we can actively change it if things go the way we don't want them to, which they consistently do. Not consistent, but we want to make sure that we're in a great position to move that if we can, aka tax planning, tax strategies.
This is good.
So.
Well, look, we've covered a lot. Obviously, you're deep in the understanding of Taylor Proactive and making sure that you're leveraging your knowledge as you continue to grow personally, professionally in this realm. And I'm excited for you in this endeavor.
Yeah, absolutely. Hopefully, we can continue partnering with you guys and help as many people as we possibly can.
Yeah, the platform, it's growing. I think for us, we want to have good partnerships to help people speak the similar language. I mean, just candidly, I'm learning just like you guys out there on a daily basis with people just like yourself that's sitting across me. And, I think it's important for us to be hungry and humble. We want to be the best we can be, but also we want to be really wise in our decisions. And that's why you have the team around you. Yeah. So what's the future for you, and what are you excited about building with Taylor Proactive?
Oh my gosh. You'd be surprised how much people ask me that question, or we get asked that question, like, okay, what's your guys' goals? What are you guys moving forward to? I always joke that we're looking to help as many people as we possibly can, but I think that's the answer that everyone gives.
Yes.
Like, oh, I'm just wanting to help people. We want to create win-win scenarios no matter what. That's what we're looking for. So you have a big exit. We don't want it to be a bad situation where, oh my gosh, I made $30 million. Now I have to pay
a lot of money
Oh
in
my,
Texas.
yes, exactly. Yeah, yeah, ton of money.
Well, I
Texas,
think
but
it's important too, and I'm
really
gonna
good
kind of like
answer.
bond together with this cry to make sure that the audience out
Please.
there understands that proactive is the name of the game. Like
Absolutely.
Taylor proactive. You know what I mean?
Yeah,
No.
we put in the name for a reason. Absolutely.
No, but be proactive. Listen,
Yeah.
it's so important, guys and gals out there that are running companies. Do not wait. You know, it's not like are you going to turn away somebody that calls you like that needs help?
I sure hope not, unless I'm
I
helping
hope
them,
your sales team doesn't either. That's a
Yeah.
bad way to run a business. But
Agreed. I would not advise.
but
that.
no, like I said, I want to align our efforts in making sure that people have a shift of understanding, a shift in this desire to make sure that people are proactive, so they're not in a bad situation. You know, for example, we have founders of companies that are growing these massive multi-million-dollar businesses only to exit without a maximal value, number one, but also only to exit to then pay a bunch of money in taxes. So can we fix it? You know, I think you guys can.
I
for
hope
sure.
so. Well, we already have.
Well, you
So,
already have.
Yeah, we're consistently doing it.
And again, that's why we're happy to partner with you guys. So anyway, we're thankful for you guys to be able to watch this today. The AHQ podcast, we continue to make awesome content along with our team, as well as individuals just like yourself who have a wealth of knowledge around this area or your area of expertise. And if you guys love today's episode, feel free to make sure to like, subscribe, and also comment who you would like to see on the next podcast. We will interview founders of companies, people that have exited companies, as well as active capital partners who are deploying capital into cash flowing assets and mitigating risk. I think that's one of the biggest things I spoke to somebody about the other day. We're not creating just a startup culture. This is it's a sustainable organization where you're allowing for capital to be able to work for and with you, as well as with other partners that believe in the same thing. So if you guys have not yet, take a look at Acquicon.com. That's our national conference. It's coming up very soon in Salt Lake City, Acquicon.com. And again, thanks so much for watching today's episode.